Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the confusing corporate mumbo jumbo. Today we are diving into Polaris's latest financial report. And let me tell you, after reading this, you might need a four-wheeler just to get through all the twists and turns. So what's the big picture? Polaris, the company that makes ATVs, snowmobiles, motorcycles and boats, had a tough year. Sales went down, profits took a hit, but they are trying to rev things back up. Let's get into the details. First off, this is a Form 10-K, which is like their annual report card to the Securities and Exchange Commission, or SEC for short. It gives all the details about how the company performed over the year. We will be looking at the good, the bad, and the confusing, so you do not have to. Polaris makes all sorts of power sports vehicles, as they call them. Think ATVs, side-by-side vehicles, snowmobiles, motorcycles, and even boats. They also sell all the extras you might need, like parts, accessories, and even the riding gear. They operate under three main business segments, which is like saying the types of businesses they own. Those are off-road, on-road, and marine. Now let's talk numbers. Overall sales for the year were about $7.2 billion. That's a 20% decrease compared to the year before. The big reason: they shipped fewer vehicles across all their brands and had to offer more discounts to keep customers interested. Discounts impact what they call net pricings, meaning they made less money on each sale due to having sales. Gross profit, which is the money left over after subtracting the cost of making the product from sales, also went down about 25%. This is because of the lower sales and those discounts we just mentioned. When we look at the overall company net income NISCO, the actual profit they made after all expenses and taxes, it fell big time. They are talking $110.8 million compared to over $500 million the previous year. That translates to $1.95 earnings per share, a big drop from $8.71 the year before. The main drivers behind the drop in net income: lower sales volumes and higher promotional costs. On a brighter note, the company's board of directors gave a small 2% bump in the quarterly cash dividend, meaning they are still confident enough to share some profits with their shareholders. Breaking down sales by region. Sales in the United States, which make up most of their revenue, were down 21% due to lower shipments across all product lines. Canada also saw a decrease. Sales in other countries were down too, especially for ATVs and motorcycles. Let's zoom in on each segment. Off-road sales dropped due to fewer ATVs and snowmobiles being shipped. They had to offer discounts. On road sales were down across the board. Again, discounts and lower net pricing played a role. Marine boat sales really struggled with a huge 37% decrease. Now let's move on to the company's assets and liabilities, which is what they own and what they owe. Their total assets are at $5.525 billion, which is similar to the $5.516 billion from last year. Their total liabilities are at $4.224 billion, which is up from last year's $4.085 billion. The company has more debts this year. The financial health of Polaris may depend on things called forward-looking statements. These are basically educated guesses about the future, and they come with some serious what-ifs. So take these with a grain of salt. Polaris lists a whole bunch of risks that could throw a wrench in their plans, like overall economic issues. So if people have less money, they might stop buying fun vehicles. Commodity prices, the cost of steel, aluminum, and other materials they use to build their vehicles, can change and mess with their profit margins. Trade wars and tariffs can also hike up costs and make it harder to sell products overseas. Competition: they are not the only ones making ATVs and motorcycles. If they can't keep up with new product designs or prices, they could lose customers. Product safety and recalls: if there are problems with their vehicles, they might have to recall them, costing lots of money and hurting their reputation. Cybersecurity: they are worried about hackers breaking into their systems and stealing important data. Regulations: new rules about emissions or product safety could force them to make expensive changes. They are in the middle of some legal battles too, including a class action lawsuit about rollover protection. The report includes a list of the company's leaders. For example, the chief executive officer is Michael Spetzen and the chief financial officer is Robert Mack. It is worth pointing out that Polaris is aware of cybersecurity and cyber attacks. While they have had no material disruptions or breaches as a result of any attacks, they cannot provide assurances that they have not experienced undetected cybersecurity incidents. Okay, so that was a lot of information to process. So what does it all mean? Polaris had a tough year, sales and profits were down, and they are facing some serious headwinds. They are working to cut costs, manage their supply chain, and keep innovating to attract customers, but there are no guarantees. There are some things to keep in mind though. The powersports market is cyclical, meaning it goes up and down with the economy. If the economy improves, Polaris could see a rebound in sales. They are also investing in new technologies like electric vehicles, which could give them a competitive edge in the future. Valuation, how does the stock look? First, the past results are already priced in. A company like this will have a price relative to its earnings, its assets, and its growth prospects. It is useful that the financial results have been poor because as such they provide a solid launching point to estimate future growth. So here's what I think. Polaris is somewhere in the middle of the road right now. They have got some challenges, but they are also taking steps to address them. Based on all that, I would say a reasonable price range for Polaris stock would be around $80 to $100. That's just my opinion though, so do your own homework before making any investment decisions.